Hey guys, how's everybody doing today? Today we're going to do something a little different where I am watching a financial documentary. It's by this group in US. It's right down here. It is great. They're doing like all the top traders of the world, and I'm going to talk about how I really see trading. I certainly am not putting myself on the scale, but similar to Amazon, you're taking an educated guess that a product will go up in value. And sometimes you'll often using charts and things like that. So we're watching a documentary on Stanley Druckenmiller. So we're going to watch a short portion. I'm going to pause it and give my commentary. So I have it on 1.5 speed. So kind of see how these videos go. And if you like them, if not, I do like them. So you can always go to the next one where I'm just reviewing products. So we're going to try it out. So this is 2010, as you can see.
For 30 years, Stanley Druckenmiller has delivered 30% profit every year for his investment, an unparalleled record on Wall Street. But then, at the peak of his career, he closes his $12 billion hedge fund.
At 57, having
So this is again Stanley Druckenmiller. He would be named the greatest macro investor of all time. Possibly he worked for George Soros. He is out Pittsburgh area, so that's why Duquesne is a college there. I have family in Pittsburgh. And again, it said right there when he started, if you had invested $10,000, you'd have 26 million today. And these are ridiculous returns year over year over year. And he's had about 10 big hits on macro investing. And these guys are often known for finding big bets and going all in, which is not really like Amazon, where you often go a little bit wider. But again, these are all interesting views on how it relates to Amazon. So we're going to go a little bit forward now.
managed other people's
So
money
we
for
see
30
his
years, he said it was enough. He didn't want the
we see his rank 85th richest in US with 3.5 billion. He recently did some things on the US debt level. He does an interview, I think, about once a year, and interesting views. Maybe we can check that out if people like this. So
stress anymore of managing other people's money.
Druckenmiller is a legend on Wall Street. Through discipline and an unorthodox investment strategy, he turned his humble upbringing into billions.
we're certainly going to skip around. I'll find the next part I found interesting. I think this is his
He'll have to do it
childhood.
his own way. In spite of his intelligence, Stanley Druckenmiller was not accepted to an Ivy League school. He goes to a liberal arts college in Maine instead. But to pay for his expenses, he opens a hot dog stand on campus.
So we see here that he's a man of he's not, many of these people will review are born into, well, I'd say it's about 50-50. They're either born into, I wouldn't say to traditional middle class homes, sometimes much lower middle class, and some are born into rich banker families. Jamie Dimon, I believe, is I think he has a backing of, upper middle class. Some of these guys, most go to the Ivy Leagues, almost all of them I've noticed, but here we have Druckenmiller does not, and he's so kind of middle class or lower middle class. He's opening a hot dog stand on college.
This entrepreneurial experience gave him a more practical understanding of how business works. I think this is one of his hallmark traits, which is that he learns by doing rather than from theories.
And that's how you're gonna have to do Amazon. You're gonna have to do it. You're gonna have to take the shot of buying the products. And is that Peter Weinstein? Yeah, Eric Weinstein. That's kind of cool. He's often on Joe Rogan. He's a worker for Peter Thiel.
For purposes of intimidation, to make it cryptic, which is otherwise simple, and to create a kind of interference competition where the field could be restricted to a smaller number of players. So I think that there's a tremendous amount of abuse of mathematics.
Druckenmiller realizes the PhD program isn't going to teach him how to make money. The only way to
So he is at University of Michigan for a degree in mathematics.
become rich is by actually playing the game of market. He leaves the PhD program and becomes a stock analyst for Pittsburgh National Bank.
And
At PNC,
here we have the Pittsburgh relationship. We're going to bounce around here. And here it goes into, so he uses macro investing mixed with technical analysis, which again, some investors compare to astrology, but it's clearly worked for him over the years. And I have my own concerns of how well it works, but a lot of traders use it and the algorithms use it, so it does affect it just by the fact that the algorithms use it.
Although most investors disregard technical chart patterns as useless, Druckenmiller believes there's always a practical explanation behind them. He doesn't look at a chart as some abstract lines. For example, during a bear run, there tend to be a falling wedge pattern. Druckenmiller believes that patterns like this are not random. Instead, they represent the behavior of real traders behind them. As a practitioner, Druckenmiller will use any technique as long as it makes him money. He quickly
So one thing that we'll see later in the video is he retires because he is used to going up against, traditional Wall Street traders. As retail traders come in, he can't really game the system as well as he does. That's kind of my opinion. He doesn't understand their trading patterns and their psychology because they're retail and, i.e., example, Wall Street bets. But he had retired much before that. We're going to skip ahead. We'll see what's going on here.
Investment division of the bank, and I was a little confused. Also, I was a little cocky and arrogant. I was 25 years old. So when I walked in, he said to me, you know the reason I'm promoting you above all these people? I said, no. He said, for the same reason they send 18-year-olds to work. They're too stupid and young to know not to charge.
Druckenmiller becomes a market wizard for PNC.
So we're here in the 1980s now where he has a couple massive swings and I think about 10 big bets. And again, these guys, when they find a trade here, like I said, unlike many Amazon traders, they don't go just 100% in. They often leverage it up to 150% because they're so sure of the trade. And this does the massive, massive outsized returns. Or at least that's what I've found on these documentaries. And again, he worked for Soros, and they have quite a few where they are so sure of the trade they even leverage up past 100% of the entire worth of the company, of the fund.
Bank and regularly gets invited to give talks to finance professionals. Impressed by Druckenmiller, a wealthy investor offers him $10,000 a month just to consult with him. It goes to show how much people wanted to listen to his views on the market. He also realizes that if people are willing to pay him that much just to speak with him, he could very well start his own fund. He raised $1 million at the age.
So he's seen here already as a young man, a master of his trade. He's clearly someone people look to for guidance.
Ready to make a fortune by riding this financial storm.
Inflation is our friend.
People don't like to raise interest rates. It's not very popular, and there was some resistance and fear of creating a recession and so forth.
The trick of investing sometimes is not about predicting a future event. It's about knowing how much other people know about this event. So in this case, Druckenmiller buys a lot of long-term bonds because people don't yet realize about this crash. And when they know a crash is coming, they will bid up the price of long-term bonds. And Druckenmiller is set to make a fortune.
So here we're in the 80s again. Inflation is running high, much like today. And Paul Volcker takes the interest rates like from 10 to 20%. You heard me right. 20% interest rates. We're at 5.25 and the system's breaking, but we're also, I believe, at 4 times debt for GDP. And so it's very similar. So we were at 1 times GDP for debt. They took it to 20%. We're at 4 times GDP for debt, and we're at 5%. So the analogy is pretty apropos. And just imagine, you're buying a house at 20%. You're leasing or buying a car at 20% interest rates. I mean, it's unfathomable today. So we're going to go up a little bit. We'll see where we are. And again, over his career, he has 1 or 2 losses, and it comes when he purchases back in at the top of the tech rally.
Once unable to pay for his college tuition, now Druckenmiller is about to make more money than what he could possibly dream of. Like all investment funds, mutual funds started out by delivering impressive returns to their investors in the early 1980s. Founded by the dynamic investor Jack Dreyfus, Dreyfus Funds is one of the pioneers in the mutual fund industry. But as any industry grows, competition leads to lower profit. Dreyfus fears that if their fund does not outperform the market, it will go under. They must find someone who represents a new breed of investors who aren't indoctrinated by the old investing paradigm. Stanley Druckenmiller seems to be the most likely candidate for them, but he isn't about to quit his own profitable fund and joins Dreyfus.
So he really bounces around from top fund to top fund. We'll see. And then he also has, like I said, the Duquesne Fund, which is his own. But he is, I think, somewhere soon going to meet George Soros, and they do the crash the pound bet, they make $1 billion in a day by many other traders today, it's kind of linked to George Soros for crashing the pound. It's there's videos on that alone. I'm not quite understanding of the trade, but they figure out that it's going to lose value, that it's pegged to, I believe, the Deutschmark, and they can't keep the peg, and they kind of
Tens of millions
explain
of
it.
profits for a mutual fund company called Dreyfus. His use of technical analysis allows him to time the market, a skill mastered by few. But what worked in the past may fail to work today. That seems to be the issue with chart rating. Because the market doesn't always react the same way, especially during periods of extreme volatility. Druckenmiller is about to learn this lesson the hard way. Trading is a competitive game. To have an edge over your opponent, it all comes down to information.
I'm gonna skip ahead here. Try to find. Okay. Mistake market still tight. Think we're at Black Monday crash.
Inflation is still climbing. The strong dollar is putting pressure on U.S. exports. The stock market is getting overvalued, with a P/E ratio way above 20. Druckenmiller
By the way, we're way above 20 now.
knows the market is set for a correction. A bubble is destined to burst eventually. To pull the trigger on shorting the market, he needs to verify that his technical indicators are in place. But on Friday, October 16th, 1987, he sees all the technical signals to suggest that the bull run will continue for a while. Since the Dow has come down to 2200 from 2700, he believes it was oversold and that there's a tremendous support near that 2200 level. It will likely go up the next Monday. So he goes all in the stock market and even borrows 30% to boost his potential returns.
So here we are again. Like I said, when they're sure of a bet, they go all in. And that is, I mean, these guys are, when they're sure, they go all in. They don't just take the entire net worth; they leverage it up, sometimes upwards of 1.5 of their entire worth of the fund, which is kind of insane. But that's how you get like 50% returns over the year. And you have to understand that means if I hand you 100 grand at the end of the year, you hand me 150,000 back. You know, well, you're going to get a lot of loyalty, and everyone is going to be trying to hire you. I believe he gets this wrong. And this is another trader we'll kind of check out on the channel if people like this. Is Paul Tudor Jones, who called it right. See, I'm unsure because on the Soros video it says Soros called this wrong, but on this Druckenmiller video it says he kind of got out in time. So I'm not quite sure if they were different funds or what exactly is going on here. But Paul Tudor Jones makes $1 billion in one day by getting this Black Monday crash. And he's kind of famous for that. He also is he's a coaching guy with Tony Robbins. So that's very interesting that Tudor Jones has a lifelong friendship with Tony Robbins. So we're gonna go on.
He executes his trades just before the market closes and has to meet his mentor, George Soros. Like Druckenmiller, Soros has built a strong bull position on the market, hoping to catch one last ride before it crashes. During the meeting, Soros shows a report to Druckenmiller, written by relatively unknown money manager Paul Tudor Jones. In the report, Jones demonstrates a historical pattern that Druckenmiller was unaware of. Paul Tudor Jones convincingly lays out his argument that a crash is imminent. Druckenmiller falls into a great panic. He devises an exit plan. Come next Monday morning, if the Dow drops anything below 30 points, he will sell his entire position.
If the Dow drops below 30 oh no, not 30%, 30 points. Okay, so the market opens 200 points lower, and I believe he gets out. But I believe, like I said, I think Soros loses a bunch on this. So it must be different funds. They're like managing different funds. Like they're managing a personal fund and they're managing Soros's fund.
Fortunately, that morning, the market didn't quite grasp that a storm is here. It actually bounced back from that negative 200 points. For Druckenmiller, he got out without losing much money. He actually went net short. By the end of October 1987, Wall Street is in ruins. Even Soros lost $200 million. But
Yeah, okay, so there it is. He lost 200 million.
Druckenmiller's fund actually went up, all thanks to his quick actions to cut losses on that fateful morning of 1987.
Most investors lack discipline. They get excited when things are great in a situation, and it's usually already in the price.
I think as long as you're disciplined and you stick to it, you make money. I have the polar opposite investment philosophy. I'm a put all your eggs in one basket and watch the basket carefully.
You know, I am also again. I mean that's it. They're not. You know, he has dude. Just look at his recent trades. He just went up like 40% on Nvidia because he believes they have. I mean, this guy is the GOAT. This guy is the greatest. And that's why we're watching the video. See if it can relate to anything in your business. And watching stuff like this keeps me hungry. It gets me hungry to grow and to see. Because again, I'm telling you, this relates to Amazon because you're still looking at charts, you're still understanding the market, and I don't recommend going all in, but when in Q4, there were products that I should have bought. I bought 40 of, I should have bought 400 of. Had I bought 400, I, it would have just magnified. And understanding when to go all in or buy more it's a tough part, but this is the type of videos that show. Another thing they do is it's common that if you have a strong conviction trade, that if the price goes down, you buy more. But these guys don't do that. If the price goes down, they immediately, or Tudor Jones or some of these, their opinions immediately sell out of the position. If it goes up and confirms your belief, they then buy more, which is like I say, it can be counterintuitive, or it's counterintuitive for me. All right, we're at the fall of the Berlin Wall, and I think this is when they're about ready to crash the pound.
The Deutschmark falls with it. Druckenmiller sees this as the best opportunity to buy the marks. Typically, when there's a budget deficit increase of a country, its currency value tends to decrease. But there's an exception to this rule. In Sarr's book, The Alchemy of Finance, he argues that fiscal deficit plus expansionary fiscal policy plus tight monetary policy equals increase of currency value.
The wall came down. I had a very, very strong belief that Germans were obsessed with inflation. And when the wall came down and it looked like they're going to merge with East Germany, the world's thesis was, this is going to be terrible for the Deutschmark. My thesis was, the Bundesbank is the most powerful institution in Germany. The public's obsessed with inflation, and they will do whatever it takes on the rate side to keep that currency strong, and there's no way that.
So the reason he believed, and again, this bet is right, that so since I believe it's the Weimar Republic, so they had a massive, I'm sure if you paid attention in history class, they were like literally taking wheelbarrows full of dollars, Germany after the First World War, and burning them to keep warm. That's how crazy inflation got. You know what I mean? This is like hyperinflation, which I think is 50% in 1 year or 50% in a few months. There's a term for it. And so he believes they're obsessed with it, and they are not going to let inflation happen. Again, this bet is right. And then they had used that formula on and he's actually long the dollar, I believe, currently. I believe that's the right one. And looking at that formula, you can kind of see the theory behind it. So, because they're expanding the balance sheet, but they have tight monetary policy with rising interest rates. So, we're going to go on to kind of see this, the bet that Soros and him are kind of known for, which is crashing the pound.
Deutschmark is going down. In fact, the place is going to grow like a weed with all this labor from Eastern Germany.
He goes all in, building a position worth $2 billion.
Up 31% in 1989.
We were all revolutionaries, and the revolution has been a success.
1989 is the last year of Reagan's presidency. Under his rule, America has been on the roller coaster ride. Leaves the Oval Office with a $220 billion deficit. The U.S. economy is at a turning point. After just 3 years running the Quantum Fund, by 1992, Druckenmiller has nearly tripled the fund's assets solely for organic growth, a record surpassing that of even Soros himself. As the U.S. economy is shaking and the world gets more chaotic, Druckenmiller is ready to capitalize.
Not sure here where we're gonna go. I'm trying to find that trade. A signal on an election. Right, here it is.
The greatest accomplishments of mankind ever. It was an amazing thing that all those countries, after centuries of war, not just World War II and World War I, but Napoleonic Wars, Franco-Prussian Wars, 100-year war, War of the Roses, 30-year war.
So what he's talking about is the European Union formed where they become like an entire group, and I think they link a lot of their money together, and that gives the opportunity to crash the pound because they're linked together.
Got together, and you think you can hold hands and say, let's learn to live in peace.
To forge the EU as a collective economy, they set up the ERM, the exchange rate mechanism, in 1979, hoping to gradually transition to a single currency. But Western Europe is a collection.
So they're trying to transition to the euro, but because of different banking, it sets up this opportunity we're going to see.
Of countries with vastly different cultures. Some value hard work and discipline, while others value leisure. But by 1992, strong currencies like French franc and German mark carry the rest of the weak currencies.
But joining the ERM failed to bring instant prosperity. Britain had already been sliding into recession. Over the next 18 months, it got much worse.
After Britain suffers a recession, it becomes harder to maintain the ratio of pounds against German mark. To save their economy, the Bank of England will have to print more money, which breaks the ERM, or the British economic suffering will get even worse. Typically, when the central bank prints more money, the currency value will decrease and the stock market will go up. This is what should happen with Britain, but the central bank is very hesitant to act.
So in their hesitancy, the Soros and Druckenmiller see the opportunity, and we're gonna see how the trade goes on. I have to keep commenting because I'm using that allows me to actually watch the video. I've reached out to the makers of it. They make amazing videos, by the way, and yeah, they didn't get back to me, so I'm gonna keep commenting.
Crisis is brewing. To Druckenmiller, this is a potential killing of a lifetime. Just before pulling the trigger, he consults Soros.
I'll never forget, I walked into his office and told him the fund at the time was $7 billion, that I wanted to put a $7 billion position on long the Deutsche mark and short the pound. I explained my reasoning to him, which I thought was very sound. He looked at me with like the most disgusted look, and I was getting angry just with the body language feedback I was getting. And he said, look, you only get an opportunity like this. This is a one-way bet, maybe 2-3 times in your career, and you're just not betting enough. We shouldn't put 100% of the fund in this trade. We should put 200% of the fund in the trade, because the most you can lose in it is 0.5%, and you can make 20% in it. So your risk reward is tremendous.
I said, go for the jugular, go for the kill.
God, savages. These guys are insane. So there they have leveled up 200% of the fund in this gamble. This is how they make $1 billion in one day.
Then simply shorting the weak currencies, he also bets on the security markets that will be affected by the currency realignment. By September 10th, after Soros and Druckenmiller fully execute their trades, they wait.
Today has been an extremely difficult and turbulent day. The government has concluded that Britain's best interests are served by suspending our membership of the exchange rate mechanism.
When the dust settles, Quantum Fund pocketed $1 billion profit. Under Druckenmiller's management, Quantum Fund goes up 69% in 1992 and 72% a year later. Hiring Druckenmiller was the best investment decision made by George Soros. Druckenmiller has made more money for Soros than he could have made himself. By 1999, Quantum Fund has grown to have $8.2 billion assets. Based on their past performance, they can make another $2 billion the year after, except the market has changed. Such a change will throw everything they learned about the market out of the window.
And this is when retail traders come in. So in the early 90s or late 90s, there was a boom of what they were doing was like setting up offices. I remember this. So I was born in 84, and they were called day traders. And just like think of it like Robinhood, where they were putting large amounts of money, like 100 grand, and they're trading in, like, if it goes up 1%, cashing out, buying back in, if it goes up 2%, cashing out, and slowly like accumulating. And most of the people who did that lost everything, much like the some of the Robinhood traders who quote unquote diamond handed. And so this was very popular, and what this did was throw off their ability to kind of game the market as well, because retail worker, they didn't understand uh their thesis. They were much more emotional traders, and they couldn't really understand as much as they understood other hedge fund investors. So we're going to go on a little bit
and make them rethink about what it means to be a trader.
Computers are supposed to make life easier. About 1 in 3 American households has bought that theory and purchased a PC.
By the late 1990s, the age of information has dawned.
If you don't get on this technology boom, if you don't compete, if you just kind of look around and resent that you're falling behind, you're going to just be left in the dust. You're going to miss the whole thing.
Even though Soros and Druckenmiller have been making ungodly amount of money using their knowledge of the market, they are unaware that a deeper change is happening. The effect of technology and information is a pattern they haven't seen before. In 1998, Druckenmiller realizes tech stocks represent an opportunity for a massive return. Based on his knowledge of stock patterns, he makes a healthy profit that year. By the start of 1999, he doubles down. But he ignores one factor. Small retail investors have flooded in as never before. That was virtually a new development on Wall Street. Before that, the players in finance are professionals, whom Druckenmiller understands. He knows their behavior and made a bloody fortune out of it. The massive participation of retail investors makes the market structurally unstable.
And there was a thing of the day trading places. They would just have like hundreds of people just sitting there going away at computers, and was often like I said, small percentage trades. So they would buy, $10,000. If it goes up 2%, sell, and then buy back in. And they I don't know what you would call, but over time almost all of them lost money. You have to remember the big tech stocks went down like 90%. Amazon went down like 90%. We should bring up some of the charts. But if you ever want to laugh, go back to Amazon, go back to Yahoo. Like these companies, people don't understand what a bubble is, go back and look at the 2021 chart of Bitcoin 3,000 to 60K. That's what the market did. It was straight up and to the right, and it did the exact opposite, going basically right back down, and it just wiped out tons and tons of retail speculators and funds. And we're going to see Druckenmiller's mistake here.
From its peak in 2000, the Nasdaq Technology Index had lost 3/4 of its entire value.
75% down.
Druckenmiller certainly finds himself in an unfamiliar situation. By April 29, 2000, Quantum Fund is down 22% for the year.
In January of 2000, after riding that tech boom to a T and making billions of dollars in 99, I sold everything out in January, and I had a couple of internal portfolio managers at Soros who didn't sell out and had the smaller portfolio, but they made 30% after I sold. And I just couldn't stand it anymore. I'm like watching them make all this money every day. And like for 2 days, I'm like ready to pick up the phone and buy this stuff back. And, you know, there's a little devil there, and then the angel, and she's saying, don't do it. And he's saying, buy it. And I pick up the phone and I buy them. I might have missed the top of the dot-com bubble by an hour. I ended up losing $3 billion.
And there we see the emotional buy and understanding in business, you know, to be able to keep your emotions intact. And so what I wanted to point out there is, so basically he sells, and he has some internal people who are still in the markets, and they're up by 30%, then 40%. And so he acts emotionally and buys the top. He buys the top of the market, says he misses it by about 2 hours, the exact very top. So, and then we're gonna go on. So he lost 2 billion. So this is like his first big loss. And a lot of these guys who have these big losses, they really reflect. And you know, it's any big mistake you make in life, the ability to reflect and come from it. I believe he retires to just handle the Duquesne fund, but he does get most of it back, and we're gonna see how.
Unable to accept his failure, Druckenmiller quit Quantum Fund and goes back to solely managing his own Duquesne fund.
I had quit Quantum and Duquesne was down 15%. And I had given up on a year and I ran away for 4 months and I didn't see a financial newspaper, I didn't see anything. So I come back and to my astonishment, the NASDAQ has rallied back almost to the high.
Druckenmiller immediately realizes that this is a chance to recover his previous losses.
And the price of oil has gone up, the dollar's gone way up, and interest rates have gone up since I was on my sabbatical. And I knew that normally this particular cocktail had always been negative for earnings and the U.S. economy. So I started buying very large positions in 2- and 5-year U.S. Treasuries. So I keep buying these Treasuries, and Greenspan keeps giving these hawkish speeches, and they have a bias to tighten. And I'm almost getting angry, and every time he gives a speech, I keep buying more and more and more. And that turned out to be one of the best bets I ever made. Again, there was no price movement. I just had such a fundamental belief. So sometimes it's price, sometimes it's just such a belief in the fundamentals.
In 2008, his fund achieves a positive return, while the rest of the market is gutted.
So again, there in 2008, he gets a positive return. So if you didn't notice with the tech thing, he goes for a 4-month completely like psychologically in a meltdown, and he comes back, and the market has rallied back to almost the high, and he has this chance to escape. And he does escape with the majority of the money intact.
But he comes to realize that it is getting more difficult to maintain his performance. By 2010, the world has changed beyond recognition. Never in history have the world economies been so interconnected. Druckenmiller decides to return his investors' money and stops trying to live up to his past performance.
Well, let's be clear, I'm not making 30% a year anymore since I retired, and I'm not running the size I used to, and I do feel like I left so much on the table.
However, since his retirement, the market has entered into an unprecedented boom. The structure of the market has evolved even further, and retail investors, once again, are flooding the market.
There have been a number of instances over my career where it was very clear to me that the world had changed. The world changed on 9/11. The world changed when the wall came down in Germany. The world changed the night Donald Trump was elected. And these set in place usually 2 to 4 year trends of concentric circles you can play. And I've always felt comfortable, again, I'm not the man I used to be, of jumping in big with a thesis, and if it's working, staying with it.
Thanks again to Daily Upside for sponsoring this video.
So yeah, that's the video. I hope you guys liked it. And if you would like to see more, I will happily certainly do these. And if you didn't like it, that's okay too. Let me know in the comments. And it doesn't matter because it's my channel and I get to do what I want to do. But I certainly also want to do what I can for the people who watch it. But I thought this would be really fun. I have a complete interest in these things and the historical context and how it kind of relates to the economy at large. So, and because most of the people who watch this are small business owners, I thought you might like it. So, everybody, it is Memorial Day 2023. Everybody, have a great and safe Memorial Day. Thanks for watching. Please like, comment, and subscribe.